Hello, this is Collar of Sublime Trading. In this episode of Mentoring Mondays, we're going to cover when the right time is to let go of a trade. Whether a trade is going in your favor or going against you, knowing when to let go of a trade is really important. When trades are bringing you plenty of profits, you're going to want to bank the profits made and not lose it. When trades are going against you, the idea is to exit at a reasonable point where you can keep your loss to a minimum. Let's first look at letting go of a trade that isn't going in your favor. How do we know when to let go of a trade? Before entering a trade, we need to know where we are going to exit. Two things need to be noted. Firstly, we want to exit at a point which will confirm that the trade was wrong. Let's say we are in a long trade in Nike. Before entering, we want to identify areas of support below price. Our stops should be placed below these support levels because a break of support will be a nice, clear indication that the long trade is not working out as we had hoped. The second thing we need to know before entering a trade is how much we are prepared to risk. We do not need to risk more than 2% of our account on any trade. We know we want to let go of a losing trade when areas of support or resistance are broken and when price reaches the 2% risk limit. These are objective rules which removes the thinking process when determining when to exit a trade. Now that we know when to let go of losing trades to reduce our losses, let's turn our focus to exiting trades that are in profit. We don't want to exit prematurely and cut our winnings short, and we also don't want to lose the profits made by exiting too late. So what is the best approach? Well, we need to have rules in place before entering trades to clearly indicate the criteria for exiting. Using the example of a long trade in Nike again, if we are in a nice moving trend, we always need to have a trailing stop which we can keep at a suitable distance below price. As price moves up, we also want to move the stop up accordingly. If price suddenly reverses, then the trailing stop should protect you from giving your profits back to the market. Trailing stops can vary. Some traders use moving averages as trailing stops, and some may opt for Donchian channels amongst others. Whichever type of stop you use, it needs to allow for enough room for price to move to avoid getting stopped out too early, but not too much room as you don't want to get stopped out too late. There have been many trades we have entered in the past which may have looked as though it was on the verge of reversing due to the nature of the deep pullbacks. Based on our analysis and determining what we were seeing were pullbacks as opposed to a market reversal, we were able to hold onto these trades, which in turn produced good profits for us. With the right trading education, you should be able to identify when price is pulling back or reversing. Not understanding this can have a negative effect on your overall balance. Areas of resistance above price may cause price to reverse, so identifying those areas early can prepare us to take the right course of action in time. Strong areas where price may reverse may be the previous year's high or a previous all-time high. Let's say price hits either of these resistance levels and struggles to break through, then starts to move in the opposite direction. We can then tighten our stops as it is signaling an appropriate time to let go of the trade. We can manage short trades in the same way when price reverses at strong support levels. Note that we never want to manually exit a trade, so always allow your stop to take you out. If you are using moving averages as stops, then you may want to use a smaller moving average when tightening stops. For example, if your stop is the 100 simple moving average, then you can do something like go down to the 70 simple moving average. Deciding when to exit a trade should not happen while a trade is in play. All the rules for exiting a losing or winning trade has to be predetermined before entering any trades. Defining these rules will allow you to keep the profit you have accumulated and keep your losses small.